Hi, Mitch Schwartz here, your Las Vegas real estate professional since 1987. I get lots of this from lots of people. My credit is already shot. Why should I even consider a short sale? Well, there's a lot of reasons why you should consider a short sale. We're going to go into them in just a couple of minutes. Because even when you're just late and you allow it to go to foreclosure, you're going to get hammered. And before we get any further, what I want you to do is, again, look at my website, LasVegasShortSaleHelper.com. It's a link below. There's lots of really good information there that'll help you make an educated decision. So let's move into it. When you're late on your mortgage, it affects your payments. As a matter of fact, your payment history affects your credit score by 35% of the total score. So that's a big impact. So you want to minimize that as much as possible. But if you're in a situation and you've gotten behind, a short sale is a viable opportunity. But let's talk about some things that will be affected if you allow it to go to foreclosure. Because what we've been told is short sales, well, yes, they will impact your credit. It will show that the loan was paid off for less than the amount. It will only impact, we've been getting told, for 18 to 36 months. Unlike a foreclosure that will be between 5 and 8 years impact. That's a big difference. Not to mention the fact, if you have credit cards of any kind, the agreement you have with the credit card agency says that if for some reason your credit changes significantly, they can change the interest rates. So there's a good chance that your credit score will go down a great deal by a foreclosure, and you're almost definitely going to see a higher interest rate on your credit card. So if you've got an outstanding balance and it's already killing you, just imagine what's going to happen if the interest rate doubled. That would not be good. Good chance of that happening on a foreclosure. Your insurance, your car insurance, if you pay renter's insurance, insurance companies base their rates a lot of times on people's credit. So if you have insurance of any kind, there's a good chance you're going to pay more in insurance. And chances are your insurance agent doesn't even understand this well enough to explain it to you. Just be prepared. Chances are you do a foreclosure, your insurance rates are going to go higher. There's a box that's on all credit applications that asks if you've ever been subject to a foreclosure. You'll always, forever and ever and ever have to mark that box. There's no box on there that asks if you ever did a short sale, but it does ask if you've been subject to a foreclosure or a repossession. And you will always, it's not a time frame, you will always have to mark that box or you will be fraudulently completing that application. Not a good thing if you ask me. The last one I found is the most difficult for most people, and that's finding a job. If you are unemployed currently and looking for a job, your credit score is going to impact that ability to find a job. Most employers today use credit to determine whether or not a person is a worthy candidate for a job. If your credit score suffers significantly as a result of a foreclosure, your already dire situation of finding a job is going to be that much more difficult. So our suggestion is that you do not allow it to go to a foreclosure. Don't stick it to the man, so to speak, because basically by sticking it to the bank and allowing them to take your property by foreclosure, you're really actually hurting yourself much more in the long run. So yes, your credit may be shot, but there's an opportunity for you to stem the tide, stop the bleeding, and protect yourself for the future, and that's called short sale. I hope this information was helpful to you. By all means, if you need additional information about this or other topics, please let me know via Facebook message. You can send me an email or give me a call. I hope you're making an awesome day.